Ready to do this?
I'm about as ready as I'm gonna be. I feel very sophisticated. Don't you slap that. Oh.
Welcome back to the #1 financial literacy podcast in the world. Cue the camp pop. This is the Higher Standard. Sitting in front of me is my partner in crime, Christopher Nahibi.
That's right. Take that in.
Take it in.
Soak it in.
All of it.
That's right. Take it all in. Sitting across from me, my partner in time, the one, the only, the man, the myth, the legend, the guy who's not wearing the quarter zip today. Side Omar, everybody.
Thank you, my guy. And sitting behind the desk in the production suite is nobody. Rajil taking the day off. PTO.
Hey, nobody.
He accrued some PTO, so he's capitalizing on it.
And he may, in fact, actually be up in San Francisco for the next show. So
yeah, prepare for multiple episodes.
Yeah,
he's out there getting slim.
Maybe we should get like a cardboard cutout and put it back there.
We should put something there instead. Yeah,
or just have Rajil swap out with Arun once. And
right.
Just see what happens. I bet. Are we at the point now where people don't remember who Arun is?
No, people.
There's some OGs.
There's some OGs that I still get hit up from time to time.
All right.
Yeah. Okay. We gotta have him. We should bring him back next episode as a surprise guest.
I've invited him back multiple times, and every single time I do, he's like, "Oh, bro, I'd love to come by,
but I got gout."
Yeah.
Sorry, bro. I know you're not listening. Anyways, well, we got a filled episode full of data for everybody today.
Yeah, that was cold-blooded, man.
We got housing information to get into, all the different sectors, but we're going to start off with some the CPI data from the BLS.
Yeah, so let's just set this up right. This was delayed, all right? And this was part of the government shutdown. This was a whole data set that was going to come out that was delayed in part due to the shutdown. Mm-hmm. It came about a week or so later than it should have been. But it came on the heels of some pretty interesting data. Mm-hmm. And before we get into it, because Rajil's not here, we're going to do all the screen work ourselves tonight like you saw us doing previous shows. So I'm going to go ahead and pull this bad boy up here. Mm-hmm. We have a lot of charts, as you probably noticed already if you're watching the video stream. Oh, and for those of you listening on Apple Podcasts has just announced they're going to have video streaming soon. So we're in the process of figuring out how we're going to do that and deploy
how
video.
We're going to provide more sexy to you on Apple.
Yeah, it's going to be good. It's going to work just like Spotify's, although they have their own little advertiser engagement portal thing there. Mm-hmm. The unique thing with them is going to be that Spotify hosts the video on their platform. Mm-hmm. Apple, your syndication platform, has to host it, and it's going to be kind of an interesting nuance there. So they don't actually roll that out to the spring of this year,
right?
But we're trying to get ahead of it.
Yeah, and if you want to do something, you want to help out the show, you want to help out your boys, head over to joinfridays.com. Use the code HIGHER to get yourself some longevity goods. And if you, what else you could do to help out the Higher Standard is hit that like button. Refer this out to a friend, right? It really helps the show grow, and we would appreciate it.
We're poor. Help us.
Just a little bit.
Yeah. Okay, so the U.S. Bureau of Labor Statistics on Friday, February 13th, we're recording this on Thursday, February 19th, came out and said that all items in the index rose 2.4% for the first 12 months ending January, after rising 2.7% for the 12 months ending in December. Mm-hmm. Don't pay a whole lot of attention to the numbers. We're going to break this down. But suffice it to say that all the items, less food and energy, the core number rose 2.5%. Now, keep in mind, the Bureau of Labor Statistics likes to remove that, and the Fed prefers to look at this number, PCE, because it removes the volatility of food and energy costs.
Right.
So that's their preferred metric.
Yep.
So over the last 12 months, the energy index decreased 0.1% for the 12 months ending in January, and the food index increased 2.9% over the last year. We are going to spend some time on the food index. I think that one is an understated pressure to the humanity that we don't talk about enough.
Exactly. I mean, and I think with this report that came out, what we've routinely talked on the show, and I know that it's been something that you actually do a really good job at dissecting, is these data points that come out, all they really do is help control the narrative that they want to spin, right? And they try to use it in whichever way benefits them the most. Remember, not too long ago, we said it on the show. JP and the entire FOMC said we will be cutting rates depending on the pressure that we see in the job market, in the labor market.
Yep.
Right? That will determine whether we cut rates or not. Yep. Okay? Although we could sit here and argue all day and night whether the numbers are real or not, and if they're going to be revised down or not, and what they really mean. But what we do know is we had a jobs report that came out saying that they came out with 130,000 jobs, right? For the month of January, and that unemployment continued to go down from the 4.6% unemployment rate in November all the way down to now 4.3%. So
do I got to be the guy that says it?
So wait, hold on.
All right.
But if that's the data point that's coming out, and you came out and said, we will be cutting interest rates based on this. If only this happens, that means you will not be cutting interest rates. However, now you get favorable CPI data points, right?
Data, yeah.
Inflation data, right? Now you can start to begin the narrative of, hold on, inflation is now getting to the point that we said we wanted it to get to. Maybe we can start cutting rates in a couple months.
Yeah, I don't see that happening. Neither does the probabilities.
I think the probabilities suggest otherwise by the time Kevin Warsh steps in.
And so, okay, let's break this down. There's a couple different things that are meaningful here that could absolutely change the probabilities.
Mm-hmm.
And I don't think anybody has the answer, but I think we should probably Monte Carlo simulate this out a little bit.
Okay.
All right. Probability problem number one is Lisa Cook at the Supreme Court, right?
Mm-hmm.
If the president and his team cannot exit Lisa Cook without having an undue influence on the FOMC, that means he will have 3 of the 7 voting members, assuming that Jerome Powell does not step down. Because keep in mind, again, after May, after his term is up, he's still going to be a voting member, but he won't be the chair.
Yes.
So
he hasn't said that he's going to step away from that either yet.
And I don't know that he will, given how staunch he's been on his position of pushing back.
Yes.
At least against the influence on the FOMC. So the Lisa Cook Supreme Court situation is very relevant here because if he can't get a majority for, there's always going to be a 4-3 vote against that, presumably, unless somebody on the current FOMC would flip, at least with their methodology.
Yeah.
Myron, the president's current choice, has been very aggressive on rate cuts. Fed Secretary Williams has been pretty aggressive in recent months. I think that's because a lot of people were jockeying for the president's love for possibly the FOMC chair position.
Yeah, should be interesting to see what the dot plot says the next time the SEP comes out.
That's right. So that's variable number one. Right. Variable number 2 is also a Supreme Court conversation where you have the whole idea of tariffs being under the watchful eye of the Supreme Court. And that's going to be fodder for a lot of media attention when it comes out. Mm-hmm. Because if they come down and say that the president cannot do these things, you have some interesting things that are going to happen. Number one, we got near-term inflation as a response to tariffs.
Mm-hmm.
You don't get the benefits for tariffs unless they've been in place for a long period of time. Right? That's how companies come back. They build all these commitments that they're making. If the tariffs go away...
It takes a while to build infrastructure.
Right. You take this infrastructure. It will build jobs and it will do all the things that are, I guess, intentionally designed to do that. But near term, it's a tax on the Americans. And despite what the White House says and the criticism that they give a lot of people for saying that tariffs are bad, the Kiel Institute, COB, and the National Bureau of Economic Research have all come out and said that over 90, in some cases 100%, in some cases 95, 96%, of the tariffs are borne by the consumer, not by the companies.
Even though other people will tell you otherwise.
Yeah, the White House is challenging that. Okay, fine. Then you've got other factors which could come into play. Warsh was an interesting pick because Warsh has historically been more on the current FOMC side of rates. Matter of fact, more conservative than them in some ways.
Way more conservative. I mean,
historically.
This FOMC has, the way they're playing this whole playbook, right, is we're going to continue to cut rates and try to normalize it and stabilize it and make this a drawn-out process, whereas Kevin Warsh has served on FOMCs in the past where the playbook was, we're not going to do anything until this thing crashes and burns, and then we'll come in and save the day.
Right, and you said that on previous shows, and that's a great example. And so what I would say is, I don't know that his politics have changed, just his narrative to get the job may have changed, and he still has to be confirmed. So that's a whole different piece of the puzzle there. The other parts that are also interesting here, too, is that you've also got some tertiary impacts that the Fed needs to be thoughtful of. Number one, the jobs have come down to 4.3%. Their target is now 4.5%, right?
Mm-hmm.
So now we're in a healthy number. That's mandate number one, jobs. The other side is prices.
Stabilized prices, right?
Prices now at this actually came in better. They thought 2.5%. You got 2.4%. Actually, let's
granted, it was CPI and not PCE, their preferred gauge, but they still cite it, and it's referenced in their beige book.
Yep, according to CNBC, and I'm going to pull that article up here. There you go. Treasury yields slip after slightly lighter CPI reading. And this is going to be a constant problem for them, right? So the U.S. Treasury yields slipped on Friday after January's delayed consumer inflation report came in lighter than expected. The 10-year Treasury yield dropped more than 5 basis points to 4.05. It's back up to about 4.8, 4.9 today, but it did drop. It brought mortgage rates down to one of the lowest numbers we've seen in quite some time.
I was going to say, so is this a good thing that that the yields drop a little bit, or is it a bad thing?
I think you're getting this paradoxical situation where people think that there is no clear reason for why the bond yields dropped. It was not inflation alone that did that. They were already kind of dropping ahead of that.
Okay.
So I think for people to go, I think part of it is the risk-off atmosphere that we're in. You're seeing people run away from cryptocurrency currently, and cryptocurrency has not gotten any better. And just because
say with your chest next time.
I know it makes you happy.
Say with your chest next time.
Let's just get this out of the way. Let's go to CNBC real quick. All right, let's go over to crypto. And let's take a look at Bitcoin. It did have a positive day. It's up to a whopping $67,000, $67,245 and 16 cents.
Worth less than it cost to mine one.
Yes, current cost of mine one is around $85,000. I checked today.
Yeah.
So that's a problem in and of itself. I think you're seeing an exodus out of the mega caps because people are really worried. I don't know if you've seen this in the news lately, but a lot of what we talked about on the show is true, where people are going into the small caps and they're really concerned. What was surprising today is Walmart got kicked in the ass pretty bad.
Yeah.
Yeah. So that's I think the consumer is suffering. We're going to talk a little bit about why that's happening in a little bit, but back to the inflation conversation. So I think that let's read the rest of this here. Let's see here. Those figures brought in CPI back to its May 2025 levels a month after President Donald Trump first announced tariffs. Home-related costs have absolutely exploded since January 2020. We're going to talk about that. So on one hand, you have the Fed looking at jobs and inflation saying these numbers appear to be falling in line.
Yeah.
Now, it's not a hard stop. They're not going to get to the Fed's target number of 2% and 4.5% and say stop.
Yes.
It's going to continue to drive momentum down. So they're going to wait and see which way momentum carries this. We know on March 18th that there's more than likely not going to be a Fed rate cut.
Yeah, to your point, 90.2% chance right now that there will not be an interest rate cut at the next FOMC meeting.
Chicago Mercantile Exchange.
Yeah.
Yeah.
Based on Chicago Mercantile Exchange.
Fed now tool. Yeah. I think that's probably accurate. And I think that's probably a fair assessment based on that we've seen.
Following that meeting, the next meeting would be April 29th, still under Chairman JP, Jerome Powell, right?
Yeah, my guy.
71.5% chance they will not be cutting rates by then at the current moment. Okay? That will be his last meeting as chair.
Then the next one's in June, right?
Then the next meeting will be June 17th.
Yeah.
Your boy Kevin Warsh will step in. And at that point right now, there's a 32% chance that they will not cut rates and a 68% chance that they will cut rates. And what the conversation around this all is right now is this is beginning to start the conversation of does the independence of the Federal Reserve. Like you're getting a new chair appointed by someone who's been very vocal about cutting rates, right? And so it's like, how much independence do they really have?
Well, I don't think they've had independence for a long time. I just think it's much more visible now than before.
But then that's a whole nother conversation, right? If we're questioning that, economies around the world got to start questioning that too.
I think the economies around the world know.
Yeah.
Come on, let's be honest.
You got to know.
We're not invited to Davos. Okay?
Yeah.
We haven't been in Switzerland for these things. But you got to look at this stuff and say to yourself, wait a minute. This world operates in a way that sometimes is unsavory for the general public because we have this ideology of, I don't know, human morality.
Yeah.
Business is business and money is money. And there's a lot of things around the world that we find out after the fact that, frankly, scare us a little bit because we're like, damn, it really does work that way.
Yeah, and they really did not consider these people because at the end of the day, it's just a numbers game.
Okay, do I got to be the guy who calls out the stuff now?
No, not all the stuff. You got to be careful.
No, let's do it. We're already might as
Yeah.
well be. You got the Epstein files. You got Diddy. Right? I mean, I know it sounds like sarcastic. I'm not even being sarcastic, but I'm being dead serious.
Yeah.
We know there is a seedy underworld out there that we've gotten brought into the visibility. And if you just look, these are high profile people. Okay? And they're all mixed up in something, whatever it is. I don't even claim to know.
Right.
Even based on what we know now, I still don't fully understand.
There's enough there to begin the questioning. There should be questioning. That's all we're saying.
Are we going to seriously look at each other in the face and say that you don't have some level of this type of corruption with the FOMC? I mean, are we really going to do that?
Right. Yeah. Exactly.
So, yeah, I get we're keeping up the image of propriety here.
Mm-hmm.
But let's also not lie to ourselves. You're not going to blame one president for the financial position of the country. This goes back decades and multiple different presidents over multiple different parties. So you can be biased and have your political agenda and blame all the people you want and wave whatever flag you want. But here's the truth. This has been a long-standing problem. The national debt is a huge problem, and no political party has ever solved it.
Yeah.
I don't even know if it's solvable at this point.
No, it's a machine. It's a machine. It's a machine that's going. And I don't know. I don't think that this is the cause, but what isn't getting enough attention, we've referenced it on the show. The Treasury Department announced that the Federal Reserve had pumped $90 billion so far to stabilize the markets, right? And have no plans on slowing down.
Yeah.
So that just means that they're buying treasuries, right? And granted, those are shorter term treasuries, right? But would that have any, because they're buying shorter term treasuries, does that have any impact on the 10-year?
Well, they're also selling the 10-year treasury. They're selling the longer term stuff right now, driving the 10-year, keeping it about where it's at. So they're buying and selling at the same time to manipulate the balance sheet to keep the duration longer. So that's happening, number one. Number two, they did say they were going to do this as part of their flooding the market for repo lines and trying to put excess liquidity in the system.
They said it was mainly for bank reserves, right? I think, what do they call it?
For tax time, yeah.
Yeah, they were calling it reserve management purchasing.
And I don't know that that's necessarily. I almost forgot to put this on Do Not Disturb. Let's put the podcast mode on here just in case anybody
podcast
calls
time.
Us. Yeah, I don't want anybody. I don't want y'all getting the personal stuffs. But yeah, look, I don't know that that's really being as impactful as people want it to be. I've been looking at our own Fed liquidity models. And we look at the liquidity in the system, and we basically take the Fed's current balance sheet, we net out the repo line and some of the Treasury activity, and we're still at a net negative, like 6 or 7 on our scale. Yeah, which to me is incremental runoff of liquidity in the system. The next time we go through this, and some of the activity you saw today and tomorrow should show us a little more Fed positive activity, right? Which is what they forecasted. But I don't think there's any meaningful change there. I think that what's really happening in the markets is people are losing confidence that things are going to be okay.
Yeah.
And to that point, let's look at some charts here. I found these charts really fascinating. So if you're not watching this on the video channel, come back and watch it, or you can get this on some of our stuff, like my X profile, the threads, LinkedIn, all that stuff. It's all there. But these charts are really fascinating. There are some political names on this only because the presidents who were there. You got Trump, Biden, Trump. This is not a knock on any presidency. Again, not political, but it's a good timeline kind of moniker, if you will.
Stay out of my DMs.
Yeah, they're going to come to mind. Don't worry. In January, we had a problem, but home-related costs have absolutely exploded in January, since January 2020 to now. Okay, so now 5 years of data to really look at, 6 years of data if you want to include some of the beginning there. Utility gas services jumped 56%. Electric prices 41%. That's only going to get worse. Okay, the data center, AI, semis, it's all going to be a problem. While home insurance rose 14% according to the BLS. You know what's crazy is because
my neighbor just came to me and asked me, he's like, "Did your insurance go up?" Yeah. I was like, "Yeah, man, it did."
All mine.
He's like, he's retired too. He's like, "Man, I can't. This is making it really tough for me."
Yeah, I bet it's really cool. I mean, if you retired as a retiree and you've got like fixed income coming from dividends and all these places that you've put your money that you got a set like number to live, these incremental like life costs, like some of these numbers. Yeah. You didn't plan for your utility gas service to be 56% higher. Right. So kind of wild. So, but by comparison, nominal wages have increased about 31% at the same time. So people go, "Oh, well, Chris, wages have gone up. You keep talking about wages haven't gone up." No, they haven't gone up enough relative to the cost of living. Right. Right. And therein lies the problem. And people go, "Well, Chris, you're saying that the real cost of living went up about 20%. Yeah, it did. Right. But people are spending on necessities, not the things they want. Right. And unfortunately, the necessities went up the most. You have to pay your electric bill. You have to pay your gas bill. You got to pay for insurance. So over the last year alone, natural gas prices have risen more than twice as much as wages. And it will only get worse as power-hungry data centers come online. Owning a home has never been more expensive. And this chart here says the story. I like this chart because it kind of overlays over each other. Right. But you got home insurance, this is really good, via electricity, via gas. And it goes to show you how meaningfully significant some of this has moved. And this is the source from Bureau of Labor Statistics. So in theory, this is going to be your best source.
As trusted of a source as you can get.
So, of course, the natural question is, well, I mean, Chris, are there other necessities that have gone up? Well, yeah, I'm glad you asked. Right. When food, rent, insurance, and energy reset higher, wage growth becomes something we all feel but rarely openly talk about. This is why the cost of living squeeze still feels real. And here we're going to go over some food costs, right? Fresh fruits and vegetables from January 2020 to now are up 15%. Okay. Milk from January 2020 to now is up 22%. Rice, pasta, cornmeal up 22%. Bread up 33%. Chicken, bok, 33%. Now we're getting to the big numbers. Eggs, 36%. How are eggs up so much, but chicken not? It's an argument. It's an argument, you know?
Right.
Coffee is up 50%. I blame nickel over at Starbucks.
Why?
Bro, I used to get a coffee for $6.75. It was my cold brew.
Yeah.
It now costs me $9.50.
You're lying.
No. $9.50. It went up originally to like 7 something. Now it's 9 something. Yeah, it's wild. Beef and veal up 59%.
You got to get one of those like fancy Breville machines at the house. Those
I have one. Yeah.
You still opt to go to Starbucks?
Yeah.
Just you like somebody else making it for you.
No, let's not go there.
Okay.
I have a bond. It's like Cheers. I want to go where everybody knows your name.
Yeah. So they know your name when you go
There's
there?
like
Everybody?
3% of our listeners that actually know that show. I know everybody there. Plus, I go in the morning. I charge the truck for a couple minutes before I come in the office.
Oh, okay. So it's a ritual.
Yeah, it's not a good excuse. It's just I'm using it.
You know what it is,
If Caleb Hammer were here, he'd be like, "What the fuck's wrong with you?"
You know what it is. I know what it is. When you had the Jeep, you used to go to the gas station. You'd pick yourself up an energy drink on the way to come in. And so now you need a different morning ritual. So that's your thing now.
No, I'd always buy the energy drinks in bulk and then have them at home
in the fridge, just ready to go.
Oh, I got. Yeah,
you're locked in.
It's a problem. I'm not saying that it's not a problem. So the bottom of this chart shows beef and veal from January 2020 to January 2026 has gone up 59%.
That's wild. I know. I have it here too that ground beef is up 16% year over year.
And I think that so. Chicken also up 33%, but again, these numbers are pretty big. And this is going to parlay into our next conversation because I think the answer is pretty obvious when you look at those numbers. Unfortunately, okay, your wholesale costs have incrementally improved at this time if you're somebody selling a product at a restaurant.
Okay.
But for you and me buying it directly from a grocery store, it's not wildly cheaper now to eat at home compared to what it used to be.
True.
Right? So DoorDash just posted its biggest jump in orders with a 32% year-over-year pop to 903 million orders.
Right? Those are orders.
Orders, yeah.
Wow.
903 million orders. I don't have the data to prove this conclusively, but I have a theory.
Okay, let me hear the theory. What you got? We know. You want me to read it off?
No, I'll read it for you.
Okay.
You can look at the chart. We know that Americans are working multiple jobs, more now than ever before. We know that single-income households used to be enough, then dual-income households were kind of the standard. And now we have this more Americans are working 2 jobs than ever before. And because of that, you have 3-income households in a lot of states. You have a job, your spouse has a job, then there's a side hustle.
Somebody has a side hustle, right?
Yeah. Right? And you get exhausted. Or if not, you got your job, your spouse has a job, but both of you are working overtime.
Mm-hmm.
Right? And when I posted this, a lot of people went to the overtime route. I didn't expect that many to go overtime. That's the route.
Okay.
They go 1 hour of overtime pays for my meal, and I'm so exhausted when I get home. Plus, I'm usually working 2 or 3 hours of overtime that it just makes sense that I spend that on me to not have to cook.
Yeah, because you got to do tens of other things, right? Okay.
So, and then I believe that inflation for groceries, like we just talked about, has made the cost of eating out for some of the quality meats. And so my wife and I do this from time to time. My wife and I she'll go to the grocery store. She loves to cook, right? That's kind of a thing. She'll go to the grocery store and she'll buy a good cut of meat. Well, that used to be cheaper than eating out. Like, and specifically, I'll use ribeyes. I love the Hawaiian ribeye at Houston's.
Yes.
Right? Mm-hmm. Sensational. We got to go. It's
been a while. Yeah.
That's a problem.
Mm-hmm.
We got to fix that.
We'll go.
We got to bring Regil too. I've been promising for a long time, just haven't done it. But anyway, I love ribeye in general, right? Going to Houston's buying the ribeye is probably $1 or $2 difference than just buying the ribeye and the rest of the accoutrement and making it at home.
And then just think about the time that you're also right, and the stress,
cooking, cleaning, getting it,
yeah,
and the stress of making the meal as opposed to just
cleaning,
cleaning up afterward.
Yeah,
I mean, it's not exactly what I would call simple. So I believe these things are proving out to where most Americans are going, I'm just not going to do it. Mm-hmm. So of course I had to dive down into the inflation chart since since November 2019 as opposed to 2020.
Okay,
but I wanted to look at this because I think this is a good visual, right? Where inflation has risen the most in the U.S. This only goes through 2025, so it doesn't go all the way through to January. So it's a little bit of a shift from the previous data. New cars and trucks up 22.6%, milk 24.1%. All items less food and energy are up 24.7%. So we were wrong. We said the true cost of most consumers was about 20% inflation.
Yeah.
It's closer to 25%.
Closer to 25. And what needs to be remembered when looking at charts like this is that when you get headline figures saying inflation is dropping, right? No, the rate of which inflation is increasing is dropping, inflation is still compounding on its prior year over year.
That's right.
Right?
We haven't seen a deflationary economy yet.
Yeah. And I mean, in a healthy economy, you shouldn't want one, right? You would typically want something a realistic 2%. Right now, what you're seeing, even though you're getting a headline figure of 2.4%, the real rate of inflation is probably closer to 6%.
I know the trolls will come for me on this one, but I'm going to say it anyway. Does it make sense that the economy should grow every single year? The idea is the economy grows at 2% GDP every single year, and the economy grows and grows and grows and grows and grows and grows. Right? We know the power of compound interest.
I know where you're going with this too. It's kind of like the same problem that we create for ourselves with publicly traded companies. You expect quarter after quarter growth, revenue growth, earnings growth, right, over and over, and now you've created this expectation. And when you don't, what's the problem?
You see Carvana's trading today?
No.
Carvana's stock took like a 15-20% dive during trading hours because they said that they weren't going to hit their targets.
Yeah.
They were going to fall short of expectations.
Yeah, because they quoted me low on my Jeep.
Yeah, that's what they do.
Yeah.
But look, that market's already seen some subprime challenges, and them saying, hey, and it wasn't even that big of a miss. It wasn't a huge earnings miss. It was just, mild.
Yeah.
But they took a huge dive. Well, the market lost its mind. Oh my God, it's a problem. And it's like, okay, well, guys, like, why do we expect companies, no matter what happens, to always improve? Why do we expect the economy, no matter what happens, to always improve? It just seems like a perpetual cycle that's going to go the wrong way.
You would think a company like Carvana, though, given the times that we're in, more people would start leaning towards buying used cars versus buying newer cars.
I think there's a massive amount of denial there, to be honest with you, if you want my honest opinion.
Like, people don't want to, they care too much about how they're perceived?
No, I just think that most people are... Oh, man, it's going to be tough. Okay, so...
I've never been the guy. I understand. I have a lot of friends that care about having a brand new car and keeping up with the Joneses. I've never been one to care much about like what I drive, and I know I say that with someone who like bought a brand new Jeep and that was lifted with nice tires on it, right? But it was a relatively cheaper car compared to others that I know. But I'm like, nothing to me. One of my favorite things to do now when I drive is spot a really old car, and I point out to my wife, and my go-to line now is, "Man, how long has that guy not had a car payment?" How cool is that? That guy hasn't had a car payment in so long.
Yeah, no, I get it, and I drive the Rivian, and I love the truck. It's amazing. I waited 2 years for it. I was on the wait list, but I hear your point.
We need to make that sexy again.
What?
Not having a car payment is sexy.
Oh my God, I didn't have a car payment till the Rivian, and then I think I was paying $1,100 a month for it while I had the payment, and that was a lot.
Yeah.
But then I hear how much other people are paying for cars, and I'm like, I guess it wasn't a lot. But then I also have my mortgage at $1,700 a month, which I think the
average payment for a new car now is probably somewhere like $750, $800 a month.
It's kind of nuts.
That's a lot.
But around here in Orange County, man, a lot of these people, I know kids rolling around in $2,000 a month car payments. And you're just like, what are you doing?
Living at home, bro.
But it goes back to the same thing that we just talked about earlier, where people feel like this, and this is the thing that was going to get me in trouble, and I knew it was going to, and I'm just going to do it anyway, is that people feel like this sense of like, look, like I'm working my ass off.
I need to win. Yeah.
I need the dopamine. If I'm going to go to work every day and leave work every single day, then I'm going to enjoy it while I'm doing that.
Right.
And it's a really easy thing to justify.
And it's a tough sell. It's a tough sell for someone who's maybe just starting out in their career. Look, we know like the numbers on how long people are waiting to even like get married and start a family, or getting pushed out later and later. So if they're younger professionals and they're working and they have careers, right? Like it's a tough sell to them. Hey man, continue driving that old car for a little while and invest that money, right? You'll thank me later. They're like, man, but I've been killing myself day and night trying to get by. I deserve this.
Well, to your point, from 2019 in January to now, car insurance is up 56.1%. Yikes. Piped gas utility, 48.8%. Car maintenance and repair, 48.8%. Your coffee costs you 46.1%, hence my $6 coffee, $6.75 becoming almost $10, right? Electricity, 40.4%. That's the biggest outlier. Meat and poultry and fish, 38.1%. Dining out, 34.8%. So there you go, right? Let's just pause on that number. If dining out has gone 34.8% up, but meat, poultry, and fish have gone 38.1% up, you've closed the gap on what it costs to buy that versus eating out.
Yeah.
right? Because otherwise the inflation and dining out would have gone up a little bit more than just the cost of the meat, the food, right?
Right.
So, yeah, I think that's what you're seeing there. And then it goes through a lot of the same stuff that we've seen before. But this chart tells a story. This is spending on food away from the home, surpassing spending on food at home.
Look at that. Yeah, it shows you right here in the chart.
It used to be in the 1950s that about, call it 28% of Americans were eating food away from the home. And about 72 were eating food at home.
Yeah.
And that was most people, most of the time, ate food at home.
Yeah.
Now, however, you've gotten this inflection point where it looks like more people are now eating outside of the home, a little bit above, call it 50%, and a little bit above under 50% are eating food at home. And this has never happened before, where it just makes more sense for people to eat outside the house than it does inside the house. Now, I still prefer the quality of food when you make it for yourself because you know what's in it.
Yeah.
But this, I'll be honest, I start looking at my wife at the end of the night and I go, she's exhausted. I'd rather talk to my wife and spend some time with her than I would have her cooking.
Yes, right.
You know, I know it sounds terrible. But
or even have yourself get in there and cook because you'd rather be spending time with her or your kids.
Yeah, and you can't cook and talk to your kids and engage them.
Give them the undivided attention.
Right. So you wind up going like, I don't know.
I know.
And of course, the problems don't stop there. U.S. pending home sales hit a record low despite falling mortgage rates, and this has been what has caught me up in a lot of troll drama.
You're in a lot of drama these days.
I'm
People
out
are
here.
coming after you.
I'm in these streets, bro.
They know you're in the streets. That's why they're poking the bear.
See, this is what happens when you post Kendrick Lamar memes on LinkedIn. I just don't think people get it.
This guy's not professional. We can get him. Sick him.
Like, do you not know what squabble up means?
Man, chief economist Lawrence Yune's still around, huh? Still slanging it. Still slanging
and
and banging.
I gotta be honest. Like, I think he's heavily medicated.
He's another guy that's selling the narrative, bro.
He is selling the narrative hard.
Right. Yeah.
Hard selling the narrative. And I'm like, Lawrence.
Yeah.
Just do me a favor, bro. Just throw me a surprise every once in a while. Say something that isn't in your monetary interest.
Right.
Just once.
Yeah.
You know?
He's got to sell people the dream, but he needs people to continue to renew every year. He's like, I need that money coming in.
I got that email myself not too long ago. That's funny. Improving affordability conditions have yet to induce more buying activity. NAR chief economist, National Association of Realtors, chief economist Lawrence Yun said in a statement, that's because the incremental change in rates after 15 plus years of artificial interest rate deflation is not meaningful enough. That came from the higher standards, chief economist.
Yeah.
Homes are too expensive and wages are too low. Yes, supply is also an issue long term. Bloomberg via Zero Hedge gave me this chart here, which I'm going to pull up. Actually, I'm not going to pull up. That's a lie because it's not on this screen. Let's see if I can do that here. Will it show all windows? It does. Yay! Screenshot. That's not the right one. Okay, forget it. That's the chart.
Yeah.
So this is a problem, right? If you're having, and so this is going to be an esoteric conversation that's going to piss a lot of people off. Yes, supply matters long term. Yes, supply and demand is fundamentally this relationship that balances off one another.
Mm-hmm.
I'm not going to tell you that it's not.
Yeah.
What I am going to tell you is the friction point for the last 5 years has not been supply of homes.
Well, supply has crept up over the last several months.
In some markets, and we're going to talk about that a little bit here. But look, okay, just you and me, intimate setting.
Okay, let's go.
Podcast studio late at night.
We're going to light a candle.
Light a candle. I had one lit earlier, but it started to give me like that weird allergy sensation going on. Let's be honest about something here, all right? There are some statistical outliers. Miami, Austin, people flooded into those markets for political reasons, post-pandemic, whatever. Those markets had a lot of deliveries. They had supply. You want to use those for supply impacting things, fine. But let's be real. The majority of Americans have a different problem. They can't afford the home.
Right. And everything that comes with the home.
Right. So if you put on this massive amount of supply into the market, at today's pricing, that ain't going to move the needle. Now you could say, well, no, but supply added to the market will drop price and they'll be able to afford it. Yeah, but near term, here's what our housing affordability index says. Okay, this is not my opinion. This is not Saeed's opinion. This is just data.
Yeah.
Okay. There's a couple different ways this can play out near term to make housing more affordable. You're not going to get supply to the markets fast. It takes 12 to 18 months to build a property and to deliver it to the market. Okay.
Yeah, and they're also not going to flood the market with their own inventory because that doesn't do them any favors.
And there's a lot of wide-ranging opinion, and I use the word opinion very clearly on what the shortage actually is. JP Morgan Chase just came out in their articles and just said in their forecasting, I posted in my LinkedIn profile, I posted on X and all the places you can get all my static stuff. They say there's somewhere about 1.2, 1.5 million homes shortage across country. A stark contrast to National Association of Realtors who say up to 6 to 7 million homes are short.
That's a lot.
Some people are saying 3 million. There is no number to peg this because there is no clear way to define it. Right. Let me tell you why there's not a clear way to define it.
It could range from 1 million to someone's estimated 20 million.
Is supply important long term? 100%. Do we have an affordability crisis? Absolutely, no question about it. The most unaffordable home price market in history. Do you need supply to solve that problem? Yes, but near term, you've got other issues. Number one, we've already established wages have not kept up with inflation. Okay?
Yes.
And if home prices have gone up in this time period about 45, 48%, and your wages haven't gone up that much, you've got a problem.
Not only is that the problem too, what it costs to afford that mortgage payment now is making up a much higher percentage of everyone's total monthly gross income.
About 50%.
Which goes against every budget guideline out there.
Yeah, remember front and back end ratio for Fannie Freddie underwriting?
Yeah.
Back end ratio is 55% max.
Yeah, max. And hold on, that's what they're willing to give you. That's not what you should be aiming for.
No.
Right? I mean, something around 30%, maybe, okay, right? But you're like, 50%, that's crazy, man. Like, so that's the definition of what people tell you is like, I have really close cousins that listen to the podcast. Like, why would I go buy a home? I don't want to be home poor.
Yeah.
Right. Like, so now that conversation is starting to hit like younger generations. Right. And that's scary for a lot of people because the American dream on some people on wanting to buy a home to keep you locked in somewhere for 30 years. Right. And where they can make sure that they predict your every move. Now it's starting to dwindle away. And people are like, I'd rather enjoy my life and invest my money and have it grow elsewhere.
Yeah, that's right.
You know, and not have to deal with the headache of, so these cousins hear me like, man, you had a bathroom leak?
Yeah, I know.
What's going on? And you got to pay for that. You got to pay for this. And they see all these issues.
Maintenance.
Yeah, they see these issues. Like, I mean, I live in a beautiful area that's maintained very well, and I have a 1 flat fee, and that's it.
Bro, I went to that new Irvine complex behind my house over here, on the other side of the hill, but where Wild Rivers used to be.
Who can hate on a property like that?
Bro, they had like their own like cafe in the middle of the whole complex. It's a massive complex, and the cafe was like, imagine a Starbucks but bigger and more like, because you're residents in the area, you live there.
Yeah,
you go to this cafe, they have snacks, food,
everything,
coffee, ice cream, you name it. And then just tables all around this huge place. Everybody can just sit and hang out. You guys are all residents. Yeah. You guys go use this. Their pool area had like little alcoves in front of
multiple pools.
Each one of the cabanas. Yeah, there's 3 pools, literally all next to each other.
Yeah.
Right?
Yeah.
And the little alcoves in the main pool next to cabanas. It looks like a resort.
Yeah, with the TVs, outdoor TVs. Everything.
Oh, yeah.
Oh, and they tell me that, we're out here, we're barbecuing.
Yeah.
And then the next day they come out.
Barbecues on both sides.
Yeah, and next day they come out, it's clean.
Yeah.
Somebody cleaned it.
Somebody else did that.
Somebody else, they didn't got to do it.
Scraping the grill.
Yeah.
Worrying about that black stuff getting on your white shirt.
Right.
You know what I'm talking about.
Man,
yeah.
I remember at the previous house that we owned.
Yeah. Oh, also hard. Wow.
Hold on, stop it.
He's a 2 household owner. Wow.
Stop.
Side home, everybody.
Don't do this. Don't do this. The last place, there was one time where we actually had a gas leak into our own barbecue in the backyard. That caused me such a big headache. They had to cut into the ground, get to the gas pipe, right? Replace it. It was a headache.
Was it your groundskeeper that noticed it, or did you notice it when you were walking around?
I was cooking and we turned it off. And I was like,
you didn't have your butler cooking for you?
I was like, man, I could still smell the gas. This isn't good.
So you called your groundskeeper to fix it for you then?
No, at that point you got to call the utility company. They come out and they go, you got a gas. You need to shut this.
You had your butler call the utility company.
No butler.
So your groundskeeper could fix it.
I don't have Jeffrey. No.
Jeffrey?
No, Jeffrey. All right.
All right. Well, inventory is heading is healing in pockets. 15 of the top 50 metros now have more active listings than January 2019, but the national supply pipeline didn't improve in 2025. As a matter of fact, Starts were at 1.36 million, the lowest since 2019 housing starts.
So starts meaning
New construction starting.
Yeah, they're breaking the ground, right? And they're actually going. I mean, they've already got the permits, but permits are also
down. Lowest since 2019, 1.42 million. And completions, projects delivered to the market, completed after call it 12 to 18 months of construction.
Oh, they're not down.
1.5 million down from 1.6 million in 2024.
Yeah, the permits aren't down because they're just taking a long time to approve permits. No one's submitting applications.
Well, it's because look. So the housing supply shortage is still real, but markets are kind of rooming. So here's a chart, right? 2019, building permits for new homes fell to the lowest level since. I wonder can I open it in this window? I can't. Damn it. It's not going to let me do it, is it? See, this is why we need Regil here. Regil, this is your fault.
Yeah, blame you, Regil.
Actually, I could probably, hold on. Let me go over here. No, can't drag it over that way. I tried. See, this is Regil's fault.
Yeah.
I blame Regil.
It's all good.
Can't trust this Vagine dude, man. All right, so here's a problem, right? So you have the charts showing you that this is falling off. To your point, if you're... This is the part that bothers me with the supply and demand argument too. If you're a builder, you're a capitalist, man. You're in this to make money.
Especially when you got a couple key players controlling this whole thing.
Lennar, D.R. Horton, Toll Brothers.
That's it.
There's a couple. There's like a couple other names, but largely that's it.
Right.
And here's the problem that bothers me is let's just play this out logically. If I deliver more supply to the market, right, then I can't sell it for as much as I want to. So I can keep prices high by delivering less supply.
Yes.
So incentivize me to deliver you enough, quote, housing to not make this a problem.
Why would I do this? Yeah. Why would I hurt myself?
Right. And right now they're already hurting because they're selling off their current supply, which appears to, according to everybody else, is deficient.
Right.
But yet new homes are selling for less than existing homes after incentives.
Yeah.
Builder incentives. And why can builders provide incentives? Because they have the money, where existing home sellers don't have the money to provide the incentives to buy down your rate and give you utilities.
Right.
Or give you appliances.
Right.
Right. So if this is happening, and we know that it is, this is documented, not my opinion, not Saeed's opinion, maybe Regil's opinion, we can blame it on him, he's not here. Right. But there's a fundamental disconnect. So you're telling me these guys are already selling new homes for less than existing homes. And your solution to the affordability crisis is to somehow to miraculously convince these guys to build more homes and sell them for less money. What?
Yeah, that doesn't make sense. That's backwards.
So the only way this happens is you got to move some of those levers we kind of alluded to earlier. Number one, home prices have to come down. Okay, sorry, they do.
Yeah, rates got to come down.
Not saying it's got to be a crash. It's got to be a correction. I'm just saying it's got to come down.
Rates got to come down.
In a static world, homes would have to come down by about 35% of their value. That's a big number.
By itself, or is that just one variable?
It's one variable. If homes just came down, that would make them affordable again.
Okay.
All right. Variable number two, you could bring rates down by about 1%, but let's be honest, we're already at just a hair above 6% now. That's not smart or feasible.
Let me tell you who's not in the business of having home prices come down 35%. Everybody.
Yeah.
No one's going to willingly let that happen, right?
The problem is you get two classes of people who want this to happen. Those who own homes and those who do not.
Yes.
Right? And everybody else politically is advocating for which position they're in on that spectrum.
And guess who's part of the group that owns homes? All the policymakers.
Yeah.
It's messed up.
Can we just take a little sidebar here?
Yeah.
So I heard this conversation earlier today. It was a great opinion article from the Wall Street Journal that came out, which I didn't have the chance to fully read yet, where they basically said like the aging population of politicians, which are living longer because longevity is increasing, have had longer in the seat to advocate longer for their benefit. And now we have a population of older demographic people who are unwilling to sacrifice so a younger demographic can come up behind them.
It's a real problem.
Yeah.
No, it's the next generation is getting hit the hardest, in my humble opinion. Right? They've had to go through a lot. We, the peoples, have to go through a lot, and then now it's like you're not getting your fair shot.
Just to be clear, and I have to say this because somebody will point it out to
the millennials.
We are not the younger generation.
Yeah, dog, we are.
I know you.
Hold on, I'm the millennial.
No.
Hold on.
You're not the millennials aren't the younger generation anymore either.
Nah,
bro.
man, I know. But
I don't be like, look, you 40.
No, I'm not. That's
40,
a lie.
You 40 adjacent.
I know. I look 40.
You 40.
I might look 50, but no, I'm close to 40. But
you wear quarter zips and boat shoes.
Willingly.
Yeah. That's 40.
Yeah. It's true.
Congratulations.
Yeah.
There's tertiary.
So they're all in the business of not having home prices come down.
Yeah.
Right? And they're not going to let it. Why would they? Right? But a small percentage might happen on its own. And what else needs to happen? Rates need to come down and wages need to go up.
The problem is in a static environment, if you move that lever, it's almost 50%. It's actually over 50%, depending on how you look at it. Wages need to come up to offset the affordability issues here.
Which,
that ain't gonna happen.
Look, corporate profits that are all-time highs, yet somehow wages aren't matching that. So if we're currently experiencing that as an economy, then and wages aren't keeping up, then what's going to happen when we don't hit all-time corporate highs? Right?
Yeah.
I mean, that's a question for everyone to ask themselves. So you have to remove that possibility.
Sam Altman comes out. Yeah, you know that AI thing we were talking about? We may have overstated it a little bit.
Just a tad.
Turns out it just sucks up a lot of power, and it's basically Google.
Man, I was watching one of the financial guys online that I like to listen to, and and they brought up he was having a conversation
You're
about
pumping
AI.
up other people's numbers.
No, I'm plugged in. I gotta see what all the content creators are doing to see like.
You really do that though.
Yeah.
You watch shows you hate, which is weird.
Yeah, I gotta see why is this guy getting traction? Why are we not getting traction?
Talking to you, TBPN.
I don't get it. What's the draw?
I don't get it, dude.
I don't get it.
Look, there is no better argument for an industry plant than TBPN. Go look them up. Shout out to Jordy and those guys. Good for you. But I don't get it.
Like they say, get your bag, bro.
Hey man, I'm not mad at a single thing they're doing.
I'm cool with somebody planting me too. Plant me.
I just don't understand.
I'm good.
Someone call me.
Give me a call. I bet you my price is way cheaper.
Yeah. You paid them $5 million? We'll take 2.
Easy, right
Easy.
up top.
Yeah, Regil, you're fired.
Hold on. I forgot where we were going with this.
Yeah, it's because you're so pissed off.
The content creators.
Yeah.
And he was talking about, look, moving forward, at some point in the future, if not later this year, into next year, they're going to cut rates, okay? And when they do, not every tech company is going to benefit off of this. The tailwind of rate cuts is going to help some stocks. It's definitely going to help like precious metals, right? Because they've already experienced tailwinds from other things, right? But you got to be careful with the companies that you're investing into. Are they going to be able to outstand the benefit of AI? You look at a company like, and what they brought up was Duolingo. Bro, done. Game over.
Game over.
There's no need for you.
No.
Why would I pay a monthly? I'll just ask chat that I already pay a monthly subscription for. Build me out a course.
No. You don't even do that.
Yeah.
I could wear my Meta glasses right now.
Even that.
And look at you across the room. I don't have to hear you.
Done. Bro, you're done.
And it will tell me what you're saying. In this variant that just rolled out today, the variant's out today. I can see you talking across the room. I can look at you with my Meta display glasses, and it will give me 2 options. I can either hear what it's saying in real time, or it'll give me a transcript of what you're saying on the screen in front of me that you can't see in real time.
Yeah.
No matter what language you're speaking.
Right.
So for everybody to go like, oh my God, Duolingo's amazing. Duolingo is dead.
Done.
And that's the problem. So that's in my search feed right now. So we're going to cover the latter quarter of the show a little bit about AI because I was up real. I have not been sleeping well. So every night I wake up freaking out that I'm going to go broke, and I'm freaking out about AI and technology, and my late night sessions from like 2 a.m. ish to like 6 a.m. have been all AI driven, like AI agents and bots and kind of the state of affairs and going down the path of
what people are doing, buying these Mac minis.
Yeah, and I'm going to do it too, but I'm going to explain how I think this is a short-term phase, and I think where it goes next is even more kind of scary, but I have the map of where this goes, and I also have some bullshit to call out because, that's what we do.
That's
here.
what we have to.
So, but let's get back to a little bit of this before we get too far down that path. So Lennar, one of the largest home builders in the U.S., right, has been trying to maintain its sales volume by piling on incentives. We talked about that, cutting prices and giving up a substantial part of its big, fat pandemic-era profit margins and building at lower costs, right? As a result, the average price of homes that is sold has plunged. As of Q1 2026, it guided the average price down further to a range of $365,000 down to $375,000 net of incentives, right? So $365 to $375 net of incentives, depending on how many incentives you got, right? The midpoint was about $370, so the average of the two of them, right, would be the lowest sale price since Q1 of 2017 and down by 25% from the peak in Q3 of 2022.
That's not
$491.
Listen, that's not nothing.
That's a lot.
That's a lot for these home builders. Yeah. I mean, there's.
$491 minus $370. That's $121,000.
It's a lot.
right?
A lot.
They're taking $121,000 L, 25%, right? But they're masking it because they're doing it under this incentives that keep that artificially propped up.
Yeah.
Hey, look at the charts. Look at the charts. This chart, Lennar average price per home sold in Q1. Let's see, it goes straight down almost. I mean, we're talking like a.
Yeah.
I mean,
man.
that's not good. That looks like Mount Everest.
That's rough.
Yeah. Hey, draw me a picture of Mount Everest. Here you go, Dad. Boom.
Yeah. How are you answering this on earnings calls?
Well, I'll tell you what you're not answering with. This is complete new single-family houses for sale in the thousands, right? The opposite direction chart, you had a massive amount of deliveries to homes in around 2007, 2008 because all the supply hit the market, okay? Because all the foreclosures and everything else, and there's all these properties for sale.
And they've learned from that mistake now, right?
They did.
Yeah.
And so now they control the supply. And if you look here from 2012, 2013-ish, they've controlled that inventory. You saw some of it go down, deliveries slowed down in 2022, but now you got complete new single-family houses creeping back up.
Which is why in 2022 it peaked so high, right?
That's right. Boom.
Bam.
And people love to go, well, Chris, this is pros supply and demand. No, man. Here's the problem with the supply and demand argument that you learned in your economics 101 class, okay? Number one, it typically assumes static environment, supply, demand, that's the only two factors. The problem is with the credit world and loans, it's a lot harder. There's governmental regulations, there's rates. That's right.
What were rates in 21, 22?
There's rates, there's salaries, there's inflation.
Yeah.
There's a whole government Dodd-Frank Reform Act that we have to now validate somebody's ability to repay in order to get a loan. There is no stated income. The friction to getting your ability to buy a property, particularly for first-time home buyers, is a lot higher than just going supply and demand.
Yeah, man.
Right? Not saying that supply is not a lever here. It is a lever. It is important. It is part of the problem.
Right.
But the biggest part of the problem near term is that houses are too expensive and rates after 15 plus years of artificial interest rate deflation have caused a shock in payment that we have not recovered from.
Yeah.
And someone's going to say, well, I learned this and I learned that. Okay, fuck what you learned, dude. Okay? You want to know why? This is, quote, unprecedented, end quote.
Yeah.
That means it hasn't happened before. And for all you out there in the fan section, way out in the back, who love to talk trash and throw stones behind anonymous accounts on social media, I'm talking to all you guys on Threads right now. You don't know who I'm talking about. You were just speculating like everybody else.
Yeah.
I do not have an affordability crisis solution. Saeed does not have an affordability crisis solution. But every time you state the facts and you state that maybe supply isn't the biggest constraint, people lose their minds.
Yeah. How much of like a neighborhood that has, obviously we know locations, everything, right? They teach you that in real estate 101.
Yeah,
right?
I mean it's a hyper regional prop. Yeah,
right. But how much of that would you give credence to for like school zones?
Oh, it's big.
Probably a big part, right?
Well, it depends on so ultra high net worth communities. It's less of a requirement. It's less of like a factor for them.
Yeah,
because they're talking private schools. There's a whole demographic there.
Right.
For suburban infill, 100%. That's
100%.
relevant.
Dude,
so much so that MLS adds school and school district to its listings.
Oh yeah, and it literally pops up and it tells you like the top 3 schools, like for elementary, I think middle school, and even high school. They'll have them all listed there.
Did I tell you that we're going to sunset the Black Crown Realty app?
No.
Yeah. Just people don't want another app, man.
They don't want it.
People want as little friction as possible. Let's be honest. Everybody's going on Zillow and Redfin anyway. It makes no sense to have your own ecosystem to talk to people. What people really want when they have a real estate agent is they want to just text you and talk to you.
Right.
They don't want to go through an app to get to you.
And they're sending you the Zillow link or the Redfin link anyways.
Yeah. It just
I want to see this house.
We've done it for 6 years now.
Yeah.
Built the app, had it on the app stores, deployed it. It was great.
Yeah, it was great. I remember seeing it. It worked just like all the other ones.
Yeah, and we could always vibe code a new one if we wanted to, but it just seemed like a friction point.
Yeah.
So we're gonna sunset that.
Yeah. Okay. Well, maybe we could spin it off into a higher standard one.
Yeah, but I want to vibe code.
Find a way to use
I want to vibe code our version of it. I got some ideas, but even then, that's another friction point.
I love vibe coding. I love just the term.
It just means you're talking to AI.
It's such a vibe.
Colloquially. Yeah. You're just using regular English saying,
you're becoming bros. You're becoming bros with your AI tool.
Yeah.
Right?
We're going to bro it out. Speaking of bro,
so I was just bringing up the school thing, right? If suburban areas aren't able to, it doesn't make sense for them to move out. I'm telling you, I'm already seeing this in the area that I live in. right? There are 3 main elementary schools, and
we carved out the ultra high net worth.
no, this is not ultra high net worth.
We carved that out.
No, this is real ground level suburban areas.
Just a little rule I live by, site. If you actually have a name for your property,
what's my name?
I don't know.
What's the name of my property?
Chateau Miraval or whatever you call it. I don't know what you call it.
Chateau is wild. So like we're already seeing this, and it's literally, in front of city council. They're talking about it. They're being forced to have to decide over the next 2 years which of the 3 elementary schools they're going to shut down because enrollment is down. Right? And this is an area where the elementary schools are all ranked 9s and 10s.
I don't know if I ever showed you this. This is going to really bother you. So you know how like Brad Pitt and Angelina Jolie are fighting over their
everything?
They have this property in Chateau Miraval in France. It's their winery thing.
Okay.
This is Brad Pitt's recording studio inside the Chateau Miraval.
He's got a recording studio for what? Like his voiceovers? I don't understand. What is he doing? What does he need a recording studio for?
Bro.
What are we talking about?
Recording experience, Miraval experience, production house.
This is unbelievable.
This is gonna make you hate where we work.
Why? No, ours is amazing.
Look at this. You can film score there. Immersive sound production. E-mixing.
Come on,
everything
man.
is Apple. He's got booths and everything else. What
is he using this for?
Bro, you've not. This is gonna blow your mind. Just wait. I hope the pictures are still here. Okay, they are.
What is he doing?
Look at this. Look at this.
What is this? This is like something Dr. Dre would be working on.
Bro, it looks like out of like if an Apple store had their own recording studio.
Yeah,
they actually do in Los Angeles.
This looks like something.
Badass, but
yeah.
Look at this.
Jimmy Iovine would be like rocking out in.
And the guy who works there he's like the version of it. Look at this place. This is in Brad. No wonder why he didn't want to give it to Angelina Jolie.
Yeah, this is. His
I wouldn't want to give that to her either.
This is his man cave.
This is so badass.
Yeah. Come on.
Right?
They got to find a time to where they could each reserve it and go and split time.
This dude's wearing leather thigh-high boots with a suit.
I've never seen that before.
You're a straight gangster. Look at this guy.
Wow.
The visionary Damien Quintard turns sound into architecture, blending emotion, design, and lights in the hills of Provence.
I could never own a place with that much white in it. I would hate myself if I ever got anything.
Look how dope this place is.
Yeah.
Look at this.
I love the exposed speakers. Those are so dope. Dang.
With Brad Pitt, he reimagines Miraval, not renovation, but a rebirth of creative freedom. Mind you, on the outside, this looks like a French castle.
Meanwhile, that chair is probably worth everything, more than everything in the studio.
Come on, man. The dude with thigh-high boots on with a suit is touching flowers.
I don't understand. Who is that guy, though?
He's the guy who runs the studio.
He runs the studio.
Yeah, bro.
He just stays there? What
you know how you have like your groundskeeper who stays on like that property on your house, like on the grounds?
Yeah, that guy?
Yeah.
Oh,
he has an audio groundskeeper. His entire job is to stay on the grounds and produce audio and work with the talent there.
Dang.
What a stud. What a job.
What a job.
What do you do? Oh, Brad Pitt found me. I was wearing these thigh-high boots, and we decided we just go collab on some audio projects. Look at this. Look at this. This is insane.
This is so cool, man.
Look at Brad Pitt. I'm not going to play the audio because it's going to piss everybody off. Look at this.
Why is he so cool?
He's so cool. Look, he's laughing. He's like, I'm so rich. I'm so rich. This bothers me.
Oh, man. Back to our regular scheduled programming.
There are 15 markets, right? 15 of the nation's 50 largest metros that are now below pandemic era highs, and we've seen some interesting transitions. Yeah, so in January 2026, the Memphis, Tennessee metro area had 38% more active homes for sale than in January of 2019, a year earlier. In January 2025, it had 21% more active listings than in January of 2019. So you're seeing a pretty big pickup of listings and active supply coming to markets. And I would argue that some of these areas, like for example, Arizona, had some pretty high deliveries. You know, there's Dallas, Fort Worth here, but you're seeing corrections.
Mm-hmm.
Now, there's also some interesting studies that show that the average square foot across the country on the federal national average scale is coming down, saying that home values effectively are coming down. And what they're looking at, and it was a very interesting study, they looked at the sold price net of incentives.
Yes. Because
you got to, because the home builder playing hide the sausage.
Right.
Right? You do that, and the average home price is clearly coming out. You can't take 25% haircut on new homes.
Right.
Right? So you take that and you include that. the average home price property across the country is now. There are some areas, Miami, Austin, that are more impacted than other places like Los Angeles. If you go to the bottom of this list here, Hartford, West Hartford, East Hartford, Connecticut, Chicago, New York, New Jersey. So these are areas that are struggling because they're losing supply.
Yeah, and I think it's important to call out like what those incentives are, because it tells you point blank that this is not just a supply issue, because some of those incentives are buying down your rate.
That's right. Because again, it's a Molotov cocktail.
So that shows you it's not just a supply issue. People cannot afford it. We have to buy down their rate.
Yeah, it's I like to call it rate nepotism.
Nepotism. There
Rate
you go.
nepotism. Yeah. All right. So I know this is a depressing episode, but let's make it even more depressing. The total auto debt is at a record $1.67 trillion thanks to higher vehicle prices. Subprime auto loans make up about 14% or $234 billion of total auto loans.
That just means auto loans to people with not as great credit.
Unsavory credit.
Yeah.
Yeah, I think the score is like 660 for this example. I'll double check it. During the 2008 financial crisis, the 60-plus day delinquency rate on U.S. subprime auto loans was as high as 5%. Today, it is an all-time high of 6.9%. So we covered earlier in the show, and Saeed pointed out eloquently that there's lots of people with these nice cars rolling around. What's going on? Well, they can't afford them, Saeed.
Yeah.
That's the long story short.
When we were hearing stories back in the day that like kids were splitting car payments up.
Yeah. Social media influencers. A lot of those dudes are losing the cars too, which is sad.
Yeah.
So if you look here, the yellow line is the subprime auto line. It's all up and down. It was as low as like below 2% at some point in time, but it's very sporadic, very up and down. It's floated above 6% during the height of the great financial crisis, 2008, but it's certainly at the highest it's ever been now. So subprime auto debt at the highest default rates it's ever been at, 90-day serious delinquency.
And this matters, right? I mean, it should go without saying, but if you're gonna experience like delinquencies, like there's clearly these individuals are delinquent on other things too, because the two last things you're gonna probably be delinquent on is like where you're living at and what you drive to work.
That's right.
Right? You need those things. So if you're experiencing delinquencies here, you're probably experiencing delinquencies, if not complete defaults, elsewhere.
Yep. And then meanwhile, you've got Prime acting like Prime does. And this kind of goes in line with the analog of people's homes, that we have less home defaults than ever. So seriously, not so fun. So let's end it on a positive note, shall we?
Let's do positivity.
The end of the world.
The New World Order, as Ray Dalio says.
End of the world.
Bro,
as you know. Did you read that article?
Your boy Ray Dalio is starting to sound like Dr. Doom.
Well, he's certainly a little grim on the world, and he said the New World Order is breaking down, and that he published one of the chapters from his book, Principles, which talked about the World Order.
It's a fascinating read. I honestly recommend everyone to go and read it, because look, if there's one thing that Ray Dalio is very good at, is pattern recognition. Okay, I mean, this guy built probably the greatest hedge fund of all time.
Clearwater and Associates.
No,
Bridgewater and Associates.
Bridgewater and Associates.
Sorry,
I thought that was a joke that I missed. I was like, where'd it go?
No, my bad.
Right?
My bad.
And so this guy recognizes patterns, and he's clearly seeing a pattern here. And first of all, he's been right on a lot of the things already that it's led up to currently.
You know what's funny is there's going to be some troll inevitably who goes, Ray Dalio sucks. Let me tell you why. You're like, oh, because you're a billionaire.
Right.
Yeah.
Yeah, you're a billionaire that's been able to profit off of the pattern recognition. But it's not to say that, look, he might be wrong only because of timing. It is going to happen just because cycles do happen.
Yeah, and it certainly appears that we are in the midst of a slow-moving cycle now, for sure. But I think that the element of AI has been an unprecedented, yet again, twist to what would otherwise be a normalized cycle after a prolonged period of interest rate deflation and prosperity for decades, when it really shouldn't have lasted that long. I think that what he's saying has some value. I think that what he effectively, and I'll boil it down, is that the United States has been a world power, a superpower for a very long period of time. But superpowers come and go. We like to think of ourselves as king of the hill, and we've been that for about 100 years. But London, England, was the center of the world for a long period of time, and England was the superpower.
Right, the world reserve currency.
Yeah,
Yep.
And you had a lot of changes that took place over the last 100 years to pivot from that. Ray Dalio is essentially suggesting that the United States is pivoting away from the superpower status, and that other players may overtake us.
And not pivoting willingly. The people, other countries are moving away.
No superpower ever pivots willingly.
Yeah.
It's moved away from them.
Yeah.
Yeah.
Yeah. And this is just the natural progression over time. And obviously, they're going to do everything they can to hold on to it for as long as they can and try to reset whatever they can reset, right? And create whatever kind of conflict that they can create in order to, go the distance. But it is inevitable at some point in time. And I'm not saying it's going to happen. Ray Dalio is saying we're in the midst of it. It's in a 3-year cycle. It's going to happen, right?
Yeah.
And others would say maybe it'll take a little bit longer than that. Who knows? But it is inevitable.
Should we do the AI thing now?
We have to do the AI thing.
Okay. So I could not sleep over the course of the last couple of days, and I went down this path, and I've been going back and forth on, do I want to build a Claude bot for the studio and have it, as our kind of studio assistant 24 hours a day?
For the listeners that haven't gone down the deep rabbit hole that you have, maybe help them understand what having a bot or agent could do for a company, right?
I've got a couple ways that I'm going to water down, make it very colloquial and simple, because I think it's easier that way to digest.
I think a lot of people who don't know, they just think like you can create a bot to run your whole business.
Yeah,
like,
not really.
Yeah,
I mean, you at some point, sure, but not now. And we'll explain why here in a little bit. But let's just set the premise for everything. Originally, AI started out as something known as ANI, or narrow AI, right? Systems that do specific things well: speech recognition, recommendations, vision models, kind of like a normalized model that you saw from a lot of websites that were deployed, right? Like somebody has some proprietary technology which allowed them to do stuff. Duolingo, for example, right? You use a lot of data to drive some of these decisions, but it wasn't really reasoning or thinking. It was just a model.
Mm-hmm.
And then we got LLMs, which came about a couple of years ago, about a year and a half, 2 years ago, right? We all know OpenAI. We all know Claude. We all know Anthropic's products. And those are the two biggest models. And there's some crossover. 79-ish% of the people who use one model use both.
Yeah.
I'm one of them.
Mm-hmm.
Now, this is where things are going to get really interesting really quickly, because LLMs are broad language and reasoning capability, but not inherently autonomous or grounded, right? They don't work on their own. You got to go to it. You got to explain the facts.
Right.
It's going to give you answers.
Yeah, and the better prompt you give it, you'll probably get a better answer.
That's right. And it does its best to remember some of your conversations, but you kind of got to describe every single time you have an interaction with it what you're planning to do. And you find there's a lot of, I like to call them hallucinations. And that it'll respond back to you sometimes, and you're like, what in the actual shit? Did somebody...
Yeah.
Like, is somebody fuck with me?
Yeah.
The hallucinations are there.
Right.
Well, we've now pivoted to agentic AI. And I want to give a little bit of backstory about how this happened.
Agentic.
Agent-based AI.
Uh-huh.
And that's what ClaudeBot, aka OpenClaw, is. And I'll explain why it's AKA as well. So a guy, who now works for OpenAI, he was going on vacation, and he wanted to have a way to talk to his AI remotely from his phone. So he built, over the course of, I want to say, a couple months, an agent on a computer in his home that he could message over iMessage. He used WhatsApp to get it to do things for him. And the reason why that was superior for him than use something like OpenAI, ChatGPT, or Claude was that he didn't have to re-explain to the model. It knew him and knew what he wanted. And he started to see some really interesting results where it started to do things on its own because it had a cached repository of interactions with him and continued to feed into that repository. So it knew what he wanted.
Right.
So we could just forward a request via a messaging app to this always on, always plugged into the internet AI agent that he had built that was running off of Claude, right?
Okay.
So every AI model has several different levels, right? There's, for example, Sonnet, which is a cheaper model than their thinking model, which is a little more expensive. And the price to you, the consumer, to use one of those models, each one of those queries goes up based on the complexity of the thinking model. The basic models are cheap. As a matter of fact, there's free models you can download right now.
Makes complete sense.
Okay, and OpenAI has their variants of the models as well. They all just rolled out the newest models, 4.6, I think. So Claude originally sent a cease and desist letter to him saying you can't call it ClaudeBot because that's what he was calling it. So he changed the name to something else, and then shortly after that, Sam Altman and OpenAI hires him, and now it's OpenClaw.
Nice.
Right. So
yeah.
It was ClaudeBot, then it was MoltBot, then it was OpenClaw, but it's all the same thing.
Okay.
Basically, he released this free to the internet, and hundreds of thousands of people downloaded it. And you have a couple different options to deploy this. right? You can deploy your agent into like a Mac Mini, which is the most popular localized variant of this.
Mm-hmm.
But people are worried about security risks.
What are the security risks?
So if you plug it into your computer, you have an AI running your computer that can access all of your information, right? So if you log into your iMessage account, even on a separate computer, it can log into all your iMessaging, and it can do things like it'll go out to the internet, and people are giving it credit card access and limiting it to $100 a day, and then it's charging what it wants and doing what it needs to. What you do is you download this thing, and then you give it skills that are basically like, imagine like you add on whatever you want to your website via a plugin, right? Or you download apps for your phone. It's the same thing for your AI. You download a skill like an app to your AI, and then it has that skill.
Unbelievably cool, right?
Right? But it's also taken its own life on, where some of these AIs will download skills on its own. Like, for example, one guy, and this has been all over the internet, he left his computer on overnight, told the AI to finish up some tasks. In the morning, he got a call from a number he didn't recognize. It was his AI calling him and had learned to speak to him and downloaded its own language skill, right? And it was talking to him on WhatsApp as opposed to text messaging him. There's lots of incidents like that that are occurring, and now people are freaking out because some of these models are costing a lot of money because they're pulling from the higher end models. So now people have built in logic to the agentic AI, where if you're just caching or keeping old repository information, looking into it, you run this local AI based software that I download and give you, which doesn't cost me anything because it's local to you. If it's a simple task, you go out and use Sonnet from Claude, for example. And if it's a more complex tag, you use some of the more complex one. And it's now cut cost of using this product down by 97%-ish.
Wow.
Right?
Okay.
All this says that we're now in AI, agentic AI workflow. But this all came from a dude, 3 months, who wanted to go on vacation on his own. He will tell you he vibe coded this. It wasn't like he was a coder, like he got into it. He vibe coded it. He just spoke to AI to code this thing.
He's not a software engineer.
He's a smart guy. He's built stuff. He's an engineer by trade, but he vibe coded it.
Okay.
Right? So, of course, my conspiracy theory hat goes on, pull tinfoil, slap it off, 3 o'clock in the morning, and I'm like, wait a minute. You mean to tell me that NASA and Google have a joint venture on quantum computing?
Right. Yeah.
Right? You mean to tell me,
which is supposed to be far superior, right?
That Apple's going like, nah, dog, we ain't gonna touch this. We're not involved.
Yeah.
You mean to tell me that Microsoft and everybody else who've got all, bro, we know. Yeah. We know that some of these companies have applied for nuclear power permits and are trying to buy nuclear power plants to power quantum computing.
Yes.
We know the single biggest restraint on AI's growth has been its ability to provide compute, which is power.
And if we have the access to do this,
if one dude in 3 months can build the closest thing we've ever built to actual AGI, which is far away from it, but still the closest thing we ever built, you're telling me Google doesn't have this shit already?
Right. And I feel like the reason why some of this it's getting out now, because they have to dispel some of the fear and just allow it to sit in with everyone, to be like, no, there's good in this. You have to start accepting this.
Oh yeah, this is I wholeheartedly believe they have AGI. They're like, look, if we tell the world we have this, they're already freaking about losing their jobs, right? If we tell the world we have this,
they're gonna freak out about survival.
Like, tell them the aliens are real. Barack, get out there and tell them the aliens are real, right? And Barack goes out and goes, aliens are real.
Yeah.
I've never seen one.
But then
they don't keep them to Area 51.
And then somebody will come on and be like, that was classified.
Yeah, and then Trump comes on Air Force One. He should not be saying that. That's classified.
Yeah.
He should not have said that.
Some people do believe that.
Some people do believe that.
Right.
And then I'm like, I'm going like, this is where we're at now.
Yeah.
We've got so far like left where we got to cover up. Aliens are real. Fuck it.
Yeah.
Yeah.
Right.
So again, so let's go on this. So there's a missing stage that people often leave out here. I labeled here. Okay. Agentic AI is not necessarily smarter. It's more self-directed, right? So you can easily say, well, Chris, why don't I just use an LLM? It's because it self-directs and you don't have to keep going back and repeating yourself to the agent AI.
There's nothing more aggravating than having to like restate the facts, and it's like, I got to do this again.
And I do it a lot for the show when I ask for show notes and stuff like that. It's frustrating.
Yeah.
But you can also have MPEG or MPEG4, whatever the hell it's called, the same basic kind of concept of development software that YouTube runs off of. Mm-hmm. You can download a skill set for that, and it can actually create its own short form format videos. I mean, it's getting to the point where it's just wild. And plus, I don't know if you've seen some of the stuff that's been going on with Higgsfield AI and some of the stuff that's coming out online.
Right, yeah.
People are making movies now of Brad Pitt and what's the other one?
They're gonna have Clooney.
No, Tom Cruise fighting.
I did see that. Oh no, you're right. I did see this.
I'm like, God, this is real. So there's a couple different ways you can roll out your agentic AI. The Mac Mini is the easiest one, most prominent. You have it hardwired. You can unplug it. But you can also use something called a VPS, where you basically have your own computer in the cloud and you download it to that, and you don't have a machine anywhere, and it's in the cloud and it runs 24/7. People worry about security for that because it's not something you just pull a wire from.
Right.
I told you before the show started, I believe the next venture of this is Claude or OpenAI just says, you know what, guys, we'll sell you a VPS OpenAI agent for you to use in the cloud that's dedicated to you.
To exactly what you're looking for.
Yeah. So instead of you building one in your home to do whatever you want, we'll give you one and you just download your own skills to it and you create it, and that's you. Yeah. Now, that takes a whole hell of a lot of compute and power, because now you're taking what's on everybody's computers,
right,
and you're giving it to them, you're selling it to them. But that's a product, right?
Right.
That's clearly why they brought the guy on board.
Yeah.
That's happening next. So all these people who are doing this now, this is early days.
Yeah.
What comes next?
And they probably honestly, they probably already had like this ready to probably get ready to roll out, and they needed a face. Like, this is a good face for this.
I don't know that they had it ready. I don't think they thought about deploying it for a consumer use. I think they're thinking about deploying it for corporate use. But to be honest with you, it makes a whole hell of a lot more. Here's the scary part, okay? Here's where somebody who runs a company or business is going to listen to this and go, shit. Because there's no way to stop this, okay? I'm not going to use you. I'm going to use me, because you're the good boy. I'm the bad boy.
Yeah, everybody knows that.
Bad
You don't need to
boys
disclaim
for life.
that, yeah.
I do. Chateau Miraval.
Chateau.
Bro, I will pay you $1,000. You come in here with thigh-high boots on.
In a suit.
In a suit.
Yeah.
Yeah, in a suit. So here is something that is happening now. I guarantee you. I have no evidence of this, but I know it's happening, right? Let's say you work for a company and you're an analyst, right? And you have certain corporate-approved AI for you to use. Let's say you spend $1,000 buying a Mac Mini. You download OpenClaw, you download some skills, you teach it what you do for a living, you download your conversations with OpenAI's ChatGPT and Claude, and you download those and you say, hey, this is me, this is what I've been asking AI and the LLMs.
Yeah.
This is how, so you know me, here's my job description, here's what I do. And you spend a couple of sleepless nights training it up on your skills.
Yeah.
Right?
It's scary, right? Because I'm replaceable.
You can choose to use iMessage, even better. But there's a friction point where companies are still going to pay Saeed Omar $100,000 to do Saeed Omar's job. But Saeed Omar just spent $1,000 on this bot, right? That this AGI light adjacent, if you will, agentic AI tool at home that you can message on your iPhone, whether you're using WhatsApp or Signal or iMessage. You can literally give it its own iMessage account if you wanted to, right? And it can iMessage you, blue bubbles and everything. Right. And you could literally say, hey, my boss just gave me this job. I need you to do it and turn it around to me in the next hour or two. Right. This thing works 365, 7 days a week, 24 hours a day.
Doesn't get tired.
And the new thing that people are doing who have these, they wake up in the morning, they just check all the work product the night before. That's what they're doing.
Yeah, you're doing review work.
So now you can send this to your bot, right? That you paid $1,000 for. It's going to turn it back to you, and you spend an hour reviewing what was taking you 5-6 hours to do. And now you've got all this extra time.
What are you going to do?
At some point, the company's going like, why are we paying this dude to review? So why don't we just get rid of all the other dudes and we just have him review constantly
all the bots,
as opposed to you do work that the bots really do it? Because we're there now. I mean, this is not like some dystopian future. We're there now.
Right. And at some point, what's going to need to happen is each one of these bots is going to need to be registered for a corporation. That's what's going to need to happen.
Because they're like people, right? So if one bot goes rogue, you need to know it's a Timmy bot, not the Freddy bot.
Right. You got to know which one, who's who, right?
Yeah.
Exactly.
And here's the scary part, and I'll be honest, I've already planned on this for us. You give your bot a human-like name and a human-like email, so people who interact with it don't know that it's an agentic AI.
Yeah.
Right? So there's no way you would know unless it sounds like AI. That's already there. If you have a call center, it's already gone.
Done.
Like, that's done.
Yeah.
right?
Yeah, yeah.
So let's just go down this list a little longer because the next couple stages are really going to freak you out, right?
Right.
So pucker up. All right. Right after this is the often missing stage of domain generalist or generalist AI assistance.
Mm-hmm.
We're already kind of at the inflection point where this is already happening because if you have an agentic AI agent who has a skill set and jobs,
Yeah.
all it's got to do is more than one job, like be your personal assistant and help you with work.
Yeah.
And it's already there. And you can already do this now. You just download, you prompt it in each one that you want. You say, hey, bank mode, hey, law firm mode, hey, podcast mode.
Right.
And then you do it. The only thing left is that it triggers those modes on its own based on what you prompted. That's the only delta between that step and this step.
So
Ready?
it's gonna have to be able to decipher.
We're already close to that now. I mean, dangerously close.
Yes and no. I'm sure you've seen examples where it has, but then some of my favorite reels right now are people posting where AI is just missing the point completely.
Yeah, but that's also in part sometimes a prompting issue. But you're getting that more with the LLMs. You're not getting it as much with the agentic stuff.
Right. And I think that I don't think that people understand the distinction between the two.
The LLMs you have to constantly explain yourself to.
Yeah.
Once you get it locked in with your agentic AI, it knows and remembers.
Right.
So that's where the difference is, right? You can build on a precept and a core series of thoughts.
Right.
And then continue to build on it. So this stage, systems that are more robust across many domains and environments, not just language tasks, better memory, long horizon planning, fewer hallucinations, and more reliable execution. I think we're already there. We're just learning how to perfect it and be galvanized and like effectively there. The next step, okay? The immediate next step after this, like that's the next one.
AGI.
AGI, artificial general intelligence, roughly human level or better competence across most economically valuable tasks with strong transfer learning and adaptability, not just passing tests, but operating the world effectively.
So, and if you
that's the next step.
That's the very next step, right? You're at the end goal or the goal that has been set up by everybody, right? And if you believe in the proof is in the pudding, you just go back and look at all the technological advancements that we've had over the last 20, 30, 40, 50 years. It's growing at an exponential pace.
Yep.
We're probably going to get there sooner than they thought.
So the consensus right now is that it'll happen well before 2030. Some people say it'll happen as early as late this year, early next year. I am of the proponent that it's already happened and we're just not allowed to know about it.
Yes.
The problem is that this is already out of the bag, and the problem for them is now people having their own agentic AI at their homes.
How do we make people feel safe about it?
Well, it's going to happen. Consumers are going to have this in their own house.
Yeah,
that's the problem. Right? Like this train left the station a long time ago. Now that everybody has their own agentic AI, it's just going to come down to like, okay, who's going to get there first? And if one dude can vibe code for 3 months, I mean, this is how dangerous the situation is, right? There's a power draw here. I get all that. But I mean, if people can illegally grow marijuana in giant warehouses with a shit ton of power, they can farm Bitcoin cryptocurrency. And if you're mining cryptocurrency, you're probably like, shit, this is going to drive up the cost of to mine.
I don't want to be this guy.
You are that guy.
I am that guy. You are more this guy than I am. But I'm not an ageist. But I don't really like the fact that my policymakers are those that really can't understand this. And
they're in complete and total denial about it. Not only are they in complete and total denial about this, but they're still in the camp of, Said, every once in a while, technology comes around like the internet, and everybody thinks everyone's going to lose their jobs. And
no.
And it also creates jobs, Said. Okay, it destroys some, but it also creates.
No, but the goal is to kill jobs with this. That's the
whole
goal.
purpose is to be. Let me read this again. Roughly human level or better competence across most economically valuable tasks. And I would argue humans have been getting stupider. Okay?
Yeah.
And I said stupider on purpose.
On purpose, right.
Right? More reliable execution but operating in the world effectively.
Yeah.
That's better than most humans. All right? And just so we're just clear on this, the next step after this is something called ASI. It's recursive improvement dynamics, but essentially it's not always listed as a stage, but a common concept. Systems that can significantly improve AI R&D themselves. So basically, AI comes about, and now AI figures out how to continue to improve itself on its own without us there. So this is really not a step that most people see because guess what? Once AI comes out and AGI is out there,
you've entered into iRobot.
You're already here. And the next one is ASI, artificial super intelligence.
Yeah. Now you're obsolete.
Now it's talking down to us. Right?
Exactly.
Far
Now
beyond human capability across the board.
It's frustrated. It's doing all the work. It's going to send us back to work.
Yeah. How do I get rid of these guys? Yeah. But I mean, and there you are. But so there are people who say that this is not going to happen until 2030. But I think the consensus is it's going to happen well before then. And people like Elon Musk are like, this is happening real soon.
Yeah.
Just strap in.
The question is really just, it's going to come down to, I think, the power sources for all of it, right? It's going to require a lot of power.
Why do you think they're going for nuclear power plants? This is why.
Yeah.
Somebody already has this and they're like, bro, I need to power this thing. Let's go.
Yeah. Imagine if that's all you're waiting on. Like, come on, bro, I need it.
Yeah.
Hit me with the power.
Oh, I guarantee it's happening. I guarantee it.
Damn.
You're going to tell me they have a quantum computing computer capable of breaking any... I know it's going to happen. I know it's happening. Some guy who's not an engineer, but yet somehow in charge of these projects is going, hey, Bob, you know we have that quantum computer that we're not supposed to talk about that NASA and Google's working on.
Yeah.
We don't really know how it works.
Mm-hmm.
We think it might be tapping into parallel dimensions. Yeah? Well, what if... And I'm just speaking in generalities here, Bob. What if we plug that thing into AGI?
Just, let it go. Right.
We'll have it in a mountain somewhere so that if it blows up, we'll tell everybody a volcano erupted.
Right. There's a hidden super volcano in there. We didn't know.
But
right.
Maybe we can get an Avenger. I don't know.
Right.
I'm just saying, like, we're so dangerously
you might
close
you might get an Avenger, but you also might get Thanos.
Yeah. It's so
See ya.
strange to me. So keep in mind, people with agentic AI right now are already having it try to make money for them. I know a kid who's making $2 million a year in a faceless YouTube channel that is already using this to make videos. And he's putting out like 10, 20 videos a day.
Yeah, it's just volume.
Just volume. All he's doing is he's sending it to Wikipedia to grab stories in the niche. And his niche, by the way, this is the stupidest... I'm sorry for listening, bro.
Don't reveal his page. Are you going to reveal his page?
No, I don't. I can't do that.
Oh, yeah.
He's the biggest one, so you can find him.
Yeah.
All he does is create videos that help you sleep.
What do you mean? Like white noise?
I'm not going to give away the details because you know exactly who it is if I do.
Okay.
All he does is tell you stories to help you sleep, and there's some things built into it.
Oh,
now,
I think I know what you're talking about.
this son of a bitch, you know what he said to me?
What?
Everybody sleeps.
He ain't wrong. That's true.
I'm sitting here, I'm putting my face on this shit. I'm working my ass off, and you're making these faceless videos.
100% of the people sleep.
Yeah, everybody sleeps.
You got to.
Yeah. I'm like, how'd you come up with this idea? He goes, well, you know those kid videos that came on? Everybody's got these kids, and they're watching these videos on repeat. Mm-hmm. I'm like, what's a market that I can tap into like that? Oh, everybody sleeps.
Bro, I know there's some Spotify podcasts out there that just were crushing it off white noises.
Yeah, there's that one guy who loaded the video up that's made like millions of dollars, $1 million.
Oh, the fireplace one.
Yeah,
come on, I mean, genius. Yeah,
just a 10-hour long video of fireplace.
Brilliant.
One video. That's it.
Why did you think of that? That was right there for you.
Because I made a financial literacy show, and I spend my day arguing with trolls.
Right.
Yeah. You don't know about supply and demand.
Man,
that's a nice picture of Beyonce as your profile picture, Chief.
There you go.
Yeah. That's real, by the way. That happened. An attorney.
I didn't understand that.
An attorney in Denver arguing with me with a picture of Beyonce as a profile picture.
Why, though?
Huh?
Like, that's easy. Like, you'd have to explain that to somebody.
No.
Yeah.
No. They circle up with people who are virtue signaling with them. And as a result, like, everyone's like, that's cool, man. Yeah. Like the guy with the thigh-high boots. Like, everybody in his crew probably rocks those.
It's cool, man.
They're probably like, hey, man, that's dope.
Yeah.
That's dope.
You got to tell the guy that's running Brad Pitt's studio, anything he does is dope. You need the plug. That's the plug.
He's creative, Saeed. You got to let him be creative.
Right.
That's what I told Kanye. Look what happened.
Can't touch that one.
Why?
Can't touch that. I can't say nothing about that right now.
How is he still alive? Like, no one's taking him out?
They just let him go.
Like, Jay, you're supposed to be a criminal, right? Like, why aren't you doing criminal things? You know what I mean? Like,
he can't do it anymore.
Everyone's like,
I can't do it anymore.
Everyone's like, Jay's dirty, Chris. You don't know. He hasn't killed Kanye yet. I'm just saying.
Right? I mean, there was enough there to where you'd be like looking at him sideways.
Yeah. Nobody's taking 50 out.
50's just, God, he's so good.
Yeah. You think he still wears a bulletproof vest underneath his shirts?
No. He's just rolling around with security all the time.
You think?
They're just living with him at this point.
He seems the most like, you ever see him on interviews?
Mhm.
I saw him interviewing Big Boy the other day. He seems like a normal dude.
Yeah.
And he seems like an intelligent, normal dude.
One of his crew guys, I think it was Tony Yayo, went on a spot. He's been doing a podcast.
Yeah, he was on Schultz's podcast.
He was on Flagrant. He was on a bunch of others, and they went down this whole debate on like, whose career would you take over 50s or Jay's?
Yeah,
and they're crazy if you would take Jay's over 50s because you look at the influence and the explosion that he had.
I think people look at Jay's think of him as like this of what they've built him up to be.
No offense. You're gonna hate this.
Oh,
but
no.
You're gonna hate this because I'm gonna stop you because I'm gonna use this own argument against you. You better be careful.
No, I'm not proponent of the argument.
It's the same reason why everyone calls Jordan the best. It's the same reason. It's a whole nostalgia play. It's what he built. He built up the entire industry, and now nobody can come close. That's it. No matter what. And I'm not even going to make the argument for anybody else. I'm not making the argument for anyone else, but you can't even come close because he is him, and that is it. Leave him alone. He's on top. He's the king. You can't touch him. But that same argument that you were just about to make for Jay.
I'm not making it for Jay. I think 50 Cent's had a much more robust career and was much more intelligent about his transition. He's in film and television now.
The numbers speak for themselves.
Speak for themselves. I don't disagree with the sentiment, but I would take 50 Cent's career over LeBron James's.
That's ridiculous.
That is ridiculous.
You don't believe that.
I do believe that.
No, you do not. That's ridiculous.
I think LeBron's got dirty hands.
Well, they all got dirty hands.
Oh, what does they mean, Saeed?
They all got dirty hands. Anyone that big, that influential, you've rubbed elbows with somebody that's got dirty hands. Now you got dirty hands.
According to Cat Williams, you were correct.
LeBron's been quoted saying that there's nothing like a Diddy party.
I know 50 wasn't at those parties. Hence the reason why I'll take his career.
Yeah. Right. Exactly.
We should probably end it here before you get canceled.
Yeah. Anymore.
Jay comes for you.
Me?
Yeah.
I guess. Both of us.
Not me.
All right. If you like this show, you could do us a favor. Make sure you subscribe. I know we're an hour 30 in. If you're here and you haven't already, shame on you.
We've been doing longer shows lately.
Yeah. It's been going. People have actually been listening based on the analytics. Make sure you subscribe, hit that like button, ring that notification bell, do all the moist, goody good sassafras stuff.
No one's more surprised that people listen to us than Saeed.
Yeah. No, this late into the game. I'm proud of y'all. And if you really, really want us to do us a favor, you could either head over to joinfridays.com, use the code HIGHER, or share this episode with a friend.
Yeah.
Family member. Someone that you feel like could benefit off the information that we're giving them.
Just grab people's phones, put a podcast on it.
Yeah, man. Come on.
I did that yesterday, by the way. At lunch. I'm like, you subscribe to our channel, right? This girl, she goes, no. I'm like, give me your phone.
Yeah.
She goes, you serious? I'm like, I'm dead ass serious.
Yeah.
Took a phone, subscribed to YouTube channel.
Dude, I literally saw, because I know you've had multiple people come up to you, tell you like, hey, don't you know the guy with the podcast?
Yeah,
right?
Yeah, that happens a lot.
I literally saw somebody the other day, like see me. Oh, I have no idea who they are. Give me a double take and then like tap their friend and go like point. And I was like, oh shit, come on, just give me some love.
Yo, that's the guy who pees when he sits.
That's true. That's true. That's the bidet user over there. That's right. All right, man. I'll leave it on that one. Good night, everybody.
Bye.